Alright, hello everybody and welcome back. So this is going to be going over a trade that I did take, the reasons why I entered, exited, and the risk management that was being applied. So let's go ahead and just start with a clean chart. That way we can break everything down. So first things first was understanding this weekly candle, knowing the fact that overall volume was bullish. Obviously no type of sells, and predominantly only buys. Now H4 structure, if you've been following, has never really made a valid higher low point. It's just been maintaining 23.6%. So where this was all the way up here. I was following it based off of, I was following H4 structure based off of H1. So I had a nice minor fib from A to B. So let's go ahead and highlight. Oops, that is not where it was supposed to go. So point A and point B right here. So this area was also maintaining 23.6% as well with this area right here. Now I didn't catch it down in here. I catched in a scale in order. So for one, I was being cautious of the fact that we were seeing a slowdown in momentum, but after this candle, seeing of how it formed with this, zoom in a little bit, seller's exhaustion and it closing above here, seeing that, we knew that there was more buyers and sellers in this market, and seeing of how it was respecting 23.6%, that's two confluences right there. So where I was, I had a trend line drawn right here from A to B. Right, I broke out. We broke out. I entered off of M5, I believe. Yeah. Trying to find the exact area. I think it was somewhere in here. But leading up to that, seeing that we were still maintaining higher low points, went down to M5. Gonna put these little cups around all the higher low points. I believe it was somewhere right in here that I entered. Let me find the exact spot. Hold on. If it would load. There we go. Okay, so gonna mark this off. Coordinates 13996. Yeah. So enter off of M5. M5 or M15, with one of those two, right? So seeing that we were maintaining higher low points, and I believe I entered off of the close of this M15 candle. Yeah, that's where it was. So long, had a stop loss right below here around like 12 pips, and it was, I caught exactly, I think 33 pips, I believe it was. So I exited like right at the top. So somewhere right in here. So this was the initial risk to reward. It was still a 1 to 2, which is alright. That's the minimum that you should be trying to look for. But I wasn't too scared, knowing the fact that one, we were having a lot of buyers volume. 2, we already respected 23.6%, and we were already moving up. And 3, that these lower time frames were not breaking any type of support too. So with that, entered, and I was maintaining it off of M5 and even down to M1. So yeah, M1, I believe I went ahead and just manually exited right as it found resistance, because I already knew that I was satisfied, for one, with the profits. It was already at negative 27%. And then 2 was, it was Friday. I wanted to have a good day. So caught the move, or some of the move, and went ahead about my day. So yeah, not everything has to be a technical aspect of exiting. If you're up a decent amount of pips and you're satisfied and you don't want to be looking at the market anymore, it's either you could just place your stop loss at the next break of support and just go about it, or you could just manually exit and just be done with the market. So that's exactly what I did. I hit my goal for that week, and that was really it. So not much to it. I think this was pretty much a textbook type trade. So but that's about it. I hope you guys enjoyed this video. I hope it helped you guys out a lot, and I'll catch you on the next one. Peace.